Fetch.AI is on a run. It seems like the artificial intelligence tokens are gaining traction again. And the question is, how much longer can this recovery last? Are we going to see new all-time highs? How much higher can we go? Let's have a look at some on-chain metrics most people are not considering. Now here's the situation today. We're currently at 60 cents. FET appreciated by 24% in the last week. And that happened while Bitcoin barely moved. It only went up by 3%. Now, Fetch.AI is one of the few major altcoins that still have significant liquidity on-chain. A lot of the larger altcoins are just traded on the centralized exchanges. They already own most of the supply. Not so for Fetch.AI. And because of that, on-chain analytics are very useful. Have a look at this. This is Fetch.AI on Ethereum. We've got 4.2 million worth of liquidity just in this pool. There are 145,000 holders on chain that own at least some Fetch. But here's the thing, not all of those wallets are created equal, right? Some wallets might just own a few cents worth of the token. Others might hold hundreds of thousands of dollars worth of the token. So you have to dig a bit deeper. Check this out. This is again the Ethereum based token. And on the left side, we've got the number of wallets that have at least 2,000 FET tokens. So at the current price, that's a bit over $1,000. And this tends to grow over time. Not that much in the last few weeks, but the overall trend is fairly bullish. Now for the chart in the middle, we go at 10x in minimum holding. So it's now $10,000 worth of the token. For the chart on the right, we are looking at the whales and the market makers. That's at least $100,000 worth of the token. There aren't too many wallets that hold that much. We are looking at roughly 400 such holders. Again, out of a pool of 145,000 holders in total. So that's 0.5% of holders roughly. Now there's not just a version on the Ethereum chain. There's also FET traded on the Binance Smart Chain. And it appears as if that version also matters. We've got 45,000 holders here. However, the on-chain liquidity is much, much smaller. We are not looking at millions of dollars, only at a bit over 100,000 per liquidity pool. Checking out the number of retail, medium-sized retail and whale investors, we have a very similar accumulation trend. But again, the heavyweights, they are all on Ethereum. On the Binance Smart Chain, there are only 20 whale wallets. And again, for comparison, there are 400 such wallets on ETH. Very often, price rallies coincide with more attention on the token, right? Attention becomes money. The more a token is talked about, the more people potentially buy the token as well. Now, one approximation of attention is trading volume, as in how much does the token move hands. Now, on the left side, we've got the number of buyers and sellers on Ethereum of Fetch.AI per day. So the left side is just the absolute number. The right side is normalized to 100%. So you can see the ratio of buyers to sellers. Now, most of the time, there are more buyers than sellers, which kind of makes sense when we see those long-term accumulation charts. The same kind of trend is true for the Binance Smart Chain. So those two charts look very similar. Ethereum and the Binance Smart Chain tends to behave the same way. But what's also noteworthy is that since beginning of the year, the number of buyers and sellers tend to rather decline on both chains. And so there's no surprise that the Fetch.AI token also tended to decline from $2 down to 60 cents. Yes, we do see a bit of recovery, but in the grand scheme of things, it doesn't look that healthy. By the way, if we zoom out a little bit more, right, we see that there are real cycles. Sometimes everybody talks about Fetch.AI, sometimes we are rather depressed, and currently we are rather depressed. Let's zoom in a little bit, because in the last month we went up, but we had a lot of volatility. So we first went down 50% to then again double. But here's what's important. The number of holders didn't really change that much. Have a look at the number of retail investors. It barely moved. The same is true for medium-sized investors. The same is true for the large holders. This here is Ethereum, and here's the same on the Binance Smart Chain. So isn't that odd? How are we seeing all of that price volatility when actually there is very little change on chain? Check out the number of returning users versus new users. Also, not really much of a change in the last month. Most of trading volume on chain happens from returning users. In other words, potentially automated bots that might be doing arbitrage trades between on-chain and off-chain prices. Off-chain meaning centralized exchanges. Now, before we go into the relative valuation charts and try to find out where we can potentially buy and sell the tokens, try to find price targets, etc., feel free to subscribe over here because I do publish videos on FET regularly on this channel. Let's start off with Fetch.AI relative to Bitcoin. Since February of 2019, we did not see great performance. Fetch.AI underperformed Bitcoin by 94%. However, if you did not suffer from the initial selling wave, there was a somewhat predictable floor. And we are close to that floor again. And a rally like this can make Fetch.AI outperform Bitcoin by more than 600%. So that's that rally over there. And here's another one. This is 500%. Here is Fetch.AI relative to Ethereum. Here, the long-term price floor isn't that clear, but we do have, at least recently, somewhat of an upwards trend. Here's Fetch.AI relative to Solana. And again, the rallies are very impressive. This here is almost 1000%. Problem is the volatility is also quite high. This alone was a drop of 50%. It's very hard to pick the perfect bottoms. And yes, a potential strategy is to try to just dollar cost average into the asset, but then you need to have a very long-term conviction fundamentally of the tokens. Now, I looked into the fundamentals of Fetch.AI in the early videos on this channel. Feel free to check that out. Things might have changed since then, but during those early times, it didn't look like Fetch.AI as a technology did get that much adoption. Here is my concern. This is the token supply of Fetch.AI, and it tends to increase over time. It was way more aggressive of a vesting schedule in the early days, and that's probably what caused the massive underperformance of the token relative to Bitcoin. Now the token doesn't expand that quickly in supply anymore, but it's definitely not a problem that's completely gone. Yes, today looks great and Fetch.AI is appreciating together with a BitTensor, so that's a competitor also in the AI space. But over the medium term, altcoins have a pretty hard time. This is others' dominance. So this is how much of all of crypto is currently in the altcoins that are not in the top 10. Fetch.AI is one of those tokens. And since January of 2022, so in the last 3.5 years roughly, that segment within crypto underperformed by 59%. And it seems like this will continue because yes, we did have some adoption in the early days and the altcoins tended to do well, but now even that trend channel tends to now break. Most people here on YouTube are always bullish on crypto. If it hits a new all-time high, then we will still see the price doubling again. If we are going down slightly, then we will bounce very quickly. If you go down even further, we have to buy the bottom. There are very few people that are courageous enough to actually give a balanced view. Here is Bitcoin relative to the best moving average. And while we have broken this recent downwards trend, we are still below the 120-day SMA. So if you run a back test and try to figure out what is the best moving average for Bitcoin, if you want to buy whenever the price is above and you want to sell whenever the price is below, then the 120-day historically had been the best. So you always want to be out of the market whenever we are below and you want to be in the market whenever we are above. And this outperforms buying and holding Bitcoin massively. And right now we are still under that moving average. It's currently at $92,000. If we stay below the moving average, I stay bearish. I rather try to bet on falling prices. And so those are the two different major strategies, right? Either always continue buying as it gets low, or try to time the market based on approaches that historically worked the best in the past. And that's what I'm doing. I'm doing approach number 2 mainly. If you've been following this channel for a while, then you do know that I'm betting on falling altcoin prices for quite a while, since Bitcoin hit 100K roughly. Thus, the members of this channel, the premium members, they are betting on falling altcoins regularly, and those are the trades that have been shared with the community. So if you put the right leverage on a trade, and if you plot the right altcoins, there is still money to be made in a market like this. We don't necessarily have to fish for bottoms. We can just go with the overall bearish trend. I know it can be a bit daunting to bet on falling prices. There are liquidations. There are people that burn themselves with it. But that's why I've created several tutorial videos on the topic, on on-chain analytics, on relative valuations, also on how to pick the right leverage and how to pick the right platform and altcoin to bet on falling prices in this market. Again, most altcoins right now underperform Bitcoin most of the time. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within 7 days and I'll refund you 100%. The link is down below. It's thebitcoinstrade.com. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers.